for sure. Let's go to our colleague Timsy, who, of course, got us all of those, updates from her sources in New Delhi. Timsy, so at the heart of this entire issue, as our tax experts were just telling us, that whether it's, prospective, retrospective, those are matters of language and debate. But I think at the heart of it is whether pre-April 2017 investments, whether they remain grandfathered or whether they will now be subject to this PPT. What's the sense you're picking up?
Well, let me put it the way it has come to us from sources, that it is not retrospective, as taxability is only post the date of treaty coming into effect. The new provisions will apply to past investments where taxable event occurred post the treaty date. So very clearly sources saying that it is not retrospective. And now what will happen is that now each country will do its procedure to make this protocol effective. At the country level, India will also inform Mauritius once it is ready with the notification of the protocol to make it applicable. So that is what they say. And just to add for our viewers, another important key area here, that India will inform all of this, India will make it clear, and the bilateral agreement will be made to get into effect to BEPS, that is the anti-treaty abuse provision of the BEPS. And this is what the government is saying, that when it comes to a clarity, when it comes to the date, yes, it will only be after the April. So before that, whatever taxability was there will not be there, and the tax liability will be only post the treaty comes into effect.
Okay, thanks a lot, Timsy, for stopping by and giving us some clarity on that.
We have Pranav Sayta of EVA India now joining us on the flashes which are at the bottom of the screen. Pranav, good afternoon. Good to have you with us here. Prashant here. Now, let me just read what this the story says, right? It says that it is understood that new provisions will apply to even past investments where the taxable event occurs post coming into effect of the protocol. Which means that if an let me, without interpreting it for you, why don't I ask you to interpret it for us? What does it mean, and is this what you expected, or is this something which you did not expect? Go on.
Yeah, so if the taxable event, if I heard you right, if the taxable event, meaning the sale of shares or the capital gain accruing arising, happens after the protocol comes into effect, which means after both Mauritius and India notify the protocol, then the protocol will apply, meaning the transaction will bear tax subject to the Mauritius treaty if the principal purpose test is satisfied. So I think that's also consistent with how we were interpreting it. The thing, of course, still remains what happens to shares which are grandfathered, which means which were originally acquired pre-2017. If they are grandfathered shares, then it would be nice if we could get a clarification that those shares will continue to remain grandfathered and the
Pranav,
test of principal purpose.
But that's the whole. Let me read out the next point, right? It says it is normally understood that that taxability is only post the date of the treaty coming into effect, even where the investments have been made at an earlier date. Now, what's your sense? I mean, will the pre-March 2017 investments continue to be grandfathered, or does it matter when the purchase was made? If the sale is made after this new amendment comes into effect, one will have to pay tax in India. Is this what it means? Yeah.
So it could mean, as I said, two things. One is if the sale happens after the protocol comes into effect, irrespective of the date of acquisition, this would be taxable. The treaty protocol would apply, principal purpose test would apply. The other way is that it is ambiguous or silent on what happens if it is but so much that it is pre-March 17. Because it could be pre the protocol, pre-2024 June, let's say, but after 2017 March, that would certainly be taxable. I don't have much doubt. Taxable as it would be subject to the principal purpose test. But it's very unclear as to whether this would apply even to acquisitions pre-2017. That I don't think is still very clear.
Pranav, and that is the billion-dollar question, right? Not billion, billions of dollars worth of a question, right? Because I guess investors might argue and tax experts may argue that the whole point of grandfathering was to ensure that investments made up until 31st March 2017 are not going to be touched. The ones made from April 1st, 2017, they were under the Indian capital gains tax regime. But does this amendment undo that grandfathering? What do you think, looking at the statements available today?
And that is indeed a big question. I think the way the wording today is, it's not very promising. So it seems to be against the taxpayer. And we are really hoping that the government clarifies this and makes it clear that that's not the intent.
You know, if anything, I think we have Mr. Kanabar on the line as well. Pranav, I was just adding that our colleagues are picking up what seems to be some sort of a clarification from North Block. And these are fresh updates that are flashing on the screen right now. And it seems that North Block sources are saying, and I quote again, it is normally understood that the taxability is only post the date of the treaty coming into effect, even where the investments have been made at an earlier date. Thus, it is not retrospective. Mr. Kanabar, great to have you back on the line, sir. The view that seems to be coming from New Delhi is that taxability arises when you sell. So if you're going to sell after the date of this amendment, well, then you have to pay tax. It's not retrospective. Does that hold water with you?
So Surabhi, we are not here trying to be good at semantics. The issue really is, as you were asking earlier, that if investments which are currently grandfathered, will they continue to be grandfathered or not, period? And if the sale happens after the date of the protocol coming into force, but the investment was made at the point of time when grandfathering was applicable, then will that grandfathering continue to apply or not? And unfortunately, the wordings as they stand today lead a doubt in one's mind, and a significant doubt in one's mind, that grandfathering will no longer be available. And therefore, if the government does indeed want the amendment to be prospective, and if it is the government's intention, that the amendment should not create hurdles, then the only way to do it is to say that the grandfathering already applied will not be revoked and will continue to apply.
No, absolutely, Mr. Kanabar, take your point. Yeah, retrospective, prospective is becoming a matter of, grammar and, word debate. I think the moot point is whether investments made prior to 2017, whether they'll remain grandfathered and out of the tax ambit or not. And that's the billion-dollar question, really. Just to, talk about the timing of this, Mr. Kanabar, any thoughts? I mean, we are in a capital market which is seeing surging block trades. MNCs are selling. I mean, we had BAT selling out its stake from ITC just a while back, and I can just go on naming transactions. A lot of private equity funds are selling, and many of them are foreign entities. I'm not sure how many are domiciled out of Mauritius. But the fact is, there's very heightened exit activity from the secondary market, from the listed markets. So, I mean, could that have a bearing? Do you see any correlation in terms of the timing of this amendment?
Personally, I do not really. As I mentioned to you earlier also on this show, that the principal purpose test is something which OECD has prescribed. This is not the first tax treaty which India has entered into where the principal purpose test has been prescribed. And rightly so, it ought to be there. If one of the principal purposes why you use a jurisdiction was tax avoidance, then treaty benefits ought to be not allowed. I think the issue is the second subpara of article of the protocol, which is creating a problem as to where does it apply. That's the limited issue. And given the fact that there is grandfathering, that should have been clarified. I do not think this amendment has been brought about at this point of time, taking into account the current capital market. It is just a part of our ordinary process, which has been happening across all the treaties that India has entered into.
Okay. All right, gentlemen, thank you very much. From the way the wording of the original protocol is and what our colleagues in Delhi picking up, I mean, it seems to be fairly clear from the government standpoint, but we need a specific mention on grandfathering, whether it still holds or not. Thank you very much for joining in with the fresh perspective on this extremely important matter. Let's take a break on that note. We'll come back on the other side and get you a check on all the buzz from dealing rooms.
Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.